Good morning this Wednesday, the 14th of August. I'm Grady Wolf, market analyst with Bell Direct. Wall Street's rally extended into another session on Tuesday as equities moved closer to July's records following the release of PPI data and ahead of the inflation reading out tonight in the US. The Dow Jones rose 1.04% on Tuesday, the S&P 500 added 1.68%, and the tech-heavy Nasdaq ended the day up 2.43%. The US Producer Price Index increased 0.1% in July, which fell short of economists' expectations and further indicates inflation in the US is easing. The US inflation reading out tonight is expected to rise just slightly on the last month but remain steady at 3% year on year. If this reading comes in below economists' expectations or in line, we will likely see equities rally on Wall Street on Wednesday as the two inflation-related readings easing will boost investor sentiment of a soft landing over a recession. Across the European markets overnight, markets closed higher in the region as investors assess the latest batch of economic data out in the region. The STOXX 600 rose 0.5%, led by strong gains among healthcare stocks, while Germany's DAX added 0.48%, the French CAC rose 0.35%, and in the UK, the FTSE 100 ended the day up 0.3%. UK wage data out overnight showed pay excluding bonuses grew by 5.4% year on year between April and June, which was the lowest rate in 2 years. The UK unemployment rate also fell to 4.2% from 4.4%, which fell short of economists' expectations, indicating strength in the UK economy as inflation continues to ease. Across the Asia markets on Tuesday, it was mostly sea of green with a green finish, led by Japan's Nikkei rising 3.45% after Japan's Producer Price Index rose 3% in July from the prior year. South Korea's Kospi Index rose just 0.12% on Tuesday, while Hong Kong's Hang Seng gained 0.32% and China's CSI Index ticked 0.26% higher. The local market rallied 0.17% yesterday despite a near 3% decline in healthcare stocks, weighing on the market gains as healthcare heavyweight CSL declined on disappointing outlook for FY25. Economic data out yesterday also added to a boosted market gains, as wage growth steadied in Q2, which was a key driver of inflation remaining high in the region. While Westpac consumer confidence data also rose 2.8% to 85 points in August from 82.7 points in July, indicating consumer sentiment is slightly improving but does remain weaker than historical levels. Now, business confidence data also out yesterday continued its downward trajectory though in July, with a reading down 1 index point from 3 index points in June, indicating Australian businesses remain pessimistic about the current state of the market. However, the ease in wages growth and slowing inflation drivers paved the way for recovery in business confidence over the second half of CY24. Temple & Webster shares shot the lights out yesterday with a 26% rise in the back of stellar FY24 results being released, including record revenue of $498 million and a strong start to FY25. James Hardie Industries, though, came under pressure yesterday following the release of a Q1 trading update for FY25. Despite posting net sales up 4% to $992 million, investors sold out of the company on a weakened outlook and weakening demand outlook and easing volumes in the company's key North American operations. On the commodities front this morning, oil is trading 2.1% lower at $78.38 a barrel. Gold is down 0.4% at $2,466 an ounce, and iron ore is down 0.6% at $100.67 a ton. One Aussie dollar is buying 65.93 US cents, 97.35 Japanese yen, 51.28 British pence, and 1 New Zealand dollar and 9 cents. Ahead of the midweek trading session here in Australia, the SPI futures are expecting the ASX to open the day up a sharp 0.73% on the back of the global rally overnight. And now let's dive into some trading ideas for your consideration today. Bell Potter has maintained a hold rating on Temple & Webster, but have raised a 12-month price target on the leading online furniture retailer from $11.40 to $12.20 following the release of the company's FY24 results yesterday. Bell Potter's analyst sees the price target increase was driven by near-term earnings upgrades factored in from the 26% revenue growth rate so far in FY25. The hold rating is maintained as at the price target of $12.20, the total expected return for investors is below 15%. And Trading Central has identified a bearish signal on Netwealth Group following the formation of a pattern over a period of 22 days, which is roughly the same amount of time the share price may fall from the close of $20.70 to the range of $18.80 to $19.30, according to standard principles of technical analysis. And that's all we have time for today. Have a wonderful day and happy investing.